Alright guys, what's going on? This is Ryan with Block Roots, and in this video I want to talk about entering in on the backside versus the front side. Alright, and we're primarily going to be talking about opening up short positions. So whether we're fading rallies, okay, selling rallies rather, okay, shorting pullbacks to resistance, okay, the idea remains the same. It's more or less a form of confirmation. So let's just become familiar first with the front side versus the back side. So say prices come down, okay, here, okay, moving up. All right, this is the front side. All right, so if we're looking to sell, a major resistance, okay, and open up a short, all right, for anticipation of price breaking down and the trend continuing after, let's say, a major breakdown previously, okay, opening up a position on the front side. Okay, let's say that this was a major support and resistance previously in price action. Okay, imagine that there's a lot that went on to the left of this. Okay, here was, okay, here was. Okay, in that case, opening up, let me just redraw this. Okay, opening up on the front side, okay, would be if we opened up a short here, okay, in anticipation of price moving downward, or here. All right, so again, these areas right here, okay, were major support and resistances previously. So entering in on the front side would be entering in here, right? So here or here, or if we continued upward, maybe there's another area up here, right? So entering in on the front side of the move, anticipating that price is going to correct, anticipating or presuming that you're capturing the next top. Okay, entering in on the back side gives you a little bit more confirmation. Now, imagine that price comes up to this level, okay, and is rejected heavily over here. It comes up again and is rejected and is moving, and even better if it's consolidating within a small range after breaking down. Okay, and we form a support. All right. If price breaks down and breaks market structure, entering in on the backside is entering in at a retest, okay, of an area that was an important area in market structure previously. So entering in on the backside, okay, after a breakdown. Now, what is important with market structure, right? So market structure, okay, when the trend is moving upward, we have a period of higher highs and higher lows, okay? A downtrend is the opposite, right? So is a change in that pattern, okay? So entering in on the backside, that can either mean that we enter in whenever the higher low, higher high pattern is broken. So it can be when we consolidate, all right, and break down, all right, or it can be when we just have a break below a previous high. So higher high, higher low, okay, make a high, reject it here, and then fall below what was the previous high. Okay, so the first retest of this, that would be considered the backside. All right, so entering in a short at the backside gives us a more clearly defined risk. Okay, so we can more clearly define our risk. So let's just draw basic support and resistance. Okay, and I'm going to show you this on the chart right after this. All right, so rather than guessing whether or not that's going to be a top or this is going to be a top, okay, the price rejects. All right, let's say it consolidates even better and breaks down. When it breaks through this zone, the first area we can expect an interaction with is a come back to the zone or a retest. All right, so at this point, when we retest this zone, if we're opening up a short here, fading this move upward, at least we have a more clearly defined stop placement based on market structure, in that if price comes back above here, okay, our thesis for price moving lower is clearly out of the question. All right, so if price comes back up here, it's invalidated. At this point, we can place a stop based on market structure in anticipation of price rejecting off of this point and continuing downward. So that's entering in on the backside. Okay, so now let's take a look at a chart, okay, and put this all together. So say, for example, that we're looking at the Bitcoin chart. Let's go into the 4-hour. All right, we have some pretty clearly defined market structure, okay. In that, I mean clear areas where price rejected off of, okay, and just extending these moving forward, okay, just put you in the mind of the trader, right? So just made these two tops right here, okay, so it looks like a double top, all right, price is rejected heavily, comes back down, makes a low, okay. At this point, you have a lot of people assuming that the trend could potentially be changing. So there's a lot of people that are going to be fading every move upward, okay. And the problem with that is, say, for example, we paint this low over here, okay? This is an area that was a previous support and resistance. Okay, support here, here. Okay, resistance basically here. Okay, resistance here, support here, resistance here. All right, what we have is more than likely traders looking to fade this, right? This immediate zone, looking to sell this. Okay, so what happens when that does not work out? Well, price moves through, it presses shorts. Okay, they have to close out by buying in. Even if price comes back down to this point after penetrating it, okay, they're going to be getting out at break even just to get out of their shorts, and that moves price up as well. So rather than anticipate, okay, where price is going to be turning, all right, just based on selling a rally, okay, on market structure like that, so anticipating that this one is going to hold, all right, it blows through, and then you anticipate that this one is going to hold. All right, what you should look for is more confirmation that, yes, the trend is changing. So as I said, that can come in the form of market structure that is clearly defined, okay, such as, look at this pattern we have here, okay, if I could just get my mouse to work, breakthrough here, all right, whether you want to draw it diagonal, okay, for this structure, okay, or horizontal, all right, it's very clear that price comes up here, okay, and in this case, yes, it's interacting with an area that was important in the past, okay, it's rejected, all right, it comes down and moves sideways, and it forms to some degree, it forms market structure in this small range, okay, and opening up a trade on the backside is what you're seeing right here. So price falls below this structure, okay, and it's beginning to make a potential trend change or form the beginning of a potential trend change, and this is where you want to enter in, okay, not presuming that here's the short or here, okay, but you want to enter in either after sign of weakness and a breakdown through the use of a market or a limit, okay, and in this case, okay, rather than anticipating that this is the top or this is the top, what you have up here is a more clearly defined battleground where buyers and sellers fought it out. Okay, one side lost ammo. All right, price broke down. And this is the area where you want to look to open up a short position. Because at this point, okay, you could place your stop here. You could place your stop here. You have very clear areas of invalidation, whether you want to do it above the 50 point of the structure, okay, or above the high. All right, and then anticipating that, you know, the next likely area that price would interact with would be right here or right here. Okay, and that is a pretty decent trade. Okay, at this point, price breaks down. Okay, so you could clearly define your area to get out. Okay, where your thesis is invalid. All right, you likely can enter in at a limit. Okay, because price is likely going to come back and retest the zone, and this is the backside. So you're looking to take advantage of opening up a short on the backside, not the front side. So after price fails. So in this case, there's a bit more clearly defined market structure, as I said. So it's consolidating, it's rejected heavily right here, then it breaks down, okay, and then we have that retest, and that's a perfect area to enter into a short. All right, some other times it's not that clean, okay, but nevertheless, still the idea remains the same. So let's go on to a 1 hour chart so we can see things on a lower time frame. All right, so okay, price is moving up again. These are areas where, you know, traders could have looked to open up shorts in anticipation that price is going to move down. Okay, here. All right, and here's where the opportunity presents itself, okay, because right here, price makes a high, attempts to break through, does break through, does not close through, okay. If we're looking at something like a 4 or 6 hour, all right, or daily, does not close through here, breaks down, and again, this is your change in market structure. So this is where you would look to open up a short, right? So it's going to be kind of loose, remember, because this is not the most liquid market. You're going to have levels that are not completely respected. But again, if you entered in a short, okay, at a retest of this zone with a limit order, okay, or entering it with a market at weakness, okay, at least at this point, your stop can be placed reasonable distance from where you currently are. Okay, so in this case, if we're targeting these lows right down here, okay, our stop in this case is about $200 away, all right, and our target is more than $500 away. So not the best risk reward profile, okay, but nevertheless, it is attractive enough to take, okay, and to throw some money at. All right, and a more clear defined example again over here. Let's just draw this range out, okay. Let me just draw this on the daily. Excuse me, throat is getting kind of dry. The high of this wick. Should probably hit space so these lines are short. Are straight. Okay, let's go down to the 4 hour. 1 hour. All right, so again, here's the structure. Okay, price is making a series of higher highs. Okay, higher, it looks to be making a higher low. Okay, higher high. All right, is rejected, falls back below. Okay, at this point, there's more weight to the thesis that the price is breaking down, the trend is changing. Okay, so these areas are going to be prime opportunities to open up shorts. Why? Okay, because this is the 50 point of this breakdown. Okay, in this low. Excuse me. But does that mean that we should just, brazenly open up a short in anticipation that this is going to hold? No, we want to see some type of breakdown. Okay, so this was your area, all right, where you're looking for price to come retest. Okay, and again, excuse me, this is the area where you want to place in order to enter in short. Okay, a breakdown and we fall below, okay, this market structure right here, and we are back below these lows as well. So this is why I say you have to draw your lines, right? So it becomes a bit more clear when you draw these lines, right? So when we have this mapped out, okay, these highs right here, okay, which coincide with, let me just draw this over here. Okay, so moving that forward, after price is rejected heavily here, it falls below this, and we could expect that the first area the price would come and interact with would be these highs and this low. And again, this is a prime opportunity to open up a short, because at this point, clearly define the area where our trade would be invalid. Okay, and what we're looking to do is, we're looking to target this low, okay, or optimally this low down here. So this is the idea, right? So not entering in, okay, let's say for example, let's talk about the hypothetical trade, okay, that does not look to be setting up, okay. So I have a new mouse and it's annoying because it also has a trackpad on it. Okay, my last one was broken. I'm on my Mac right now. So if we were looking to, a lot of traders would be looking to short this. I would say that if we came up here, we'd probably blow through it. But nevertheless, what would we want to see? Okay, you could take this trade, right, where price moves up. Okay, you could expect some level of rejection. But what I would rather take is price. Excuse me. Let's say price comes up here, rejects. Okay, I'm not looking to enter into a short until we lose this level. Oi, Jesus, got an itch in my throat. Until we lose a level. All right, let me just draw this a little bit more cleanly. I'm getting lazy with those with that drawing tool. Okay, say for example, price comes up here. Okay, breaks down. All right, so I would be looking to open up a short after breaking down and consolidating if we broke down, okay, rather than blowing right through. So a retest of this zone. So that's that, guys. I wish I could edit out these coughs. They're a pain in the ass. But it's just drawing this simply. It's like this. All right, say we have a major area of resistance, okay, that we're looking to come back and retest. Okay, if I don't break my computer now, it would be amazing. Coming back to retest this zone, okay, moving up towards the zone. All right, price consolidates at a point, okay, rather than just entering in a short, okay, at first sign of weakness, okay, at each one of these tops, all right, we're entering in after a breakdown and a retest. Okay, so we're entering in on the backside at that point, okay, of market structure, all right, because at that point, we've lost either we have one of these, okay, where price is making a higher high, higher low, okay, and then falls back below this low, okay, a previous low. In that case, that's where we could look to open up a short. Okay, because at that point, this high can be our invalidation. Or we have one of these, okay, where price moves up towards a key area of resistance, all right, is rejected, comes back down, and does more of a consolidation pattern. All right, so if it builds a range and it consolidates and then it breaks down, I would say that the odds are much more in your favor. So the retest of the consolidation zone. All right, guys, so that's is entering in on the backside. This is going to be for opening up short positions, and I think that it's important time to talk about this right now, considering the potential trend change that we have. That's that, guys. Have a great night. Sorry for all the coughing.